Welcome Bitcoin friends, it's Bitcoin Momo. Today we're going to do some Bitcoin technical analysis, look at all this crazy price action. Are we going to keep dropping lower? Are we going to turn around and go higher again? We'll look at some possible targets if we do keep going lower. And we'll also look at some more long-term analysis. And we'll look at exactly where is the peak going to be at the end of this bull run. And we'll tell you how you can find that peak and where to get out before the next bear market. So stay tuned. Hope you enjoyed this video. Let's get straight into the action. So as we can see here, this is on the 4-hour chart. We can see we have been going up steadily for quite a while here. This was the when Elon Musk put Bitcoin in his profile on Twitter, and we had a quick drop back down, and then this is where Elon confirmed that he bought Bitcoin. We had that big pump. We've been traveling steadily upwards since then. And then we happened to turn around at around the 58,000 level, and we had this massive drop here all the way down from basically from 58,000 all the way down to 46,600. So $12,000 drop there. Currently we are getting some support here on the 50 moving average on the 4-hour chart. One of these is the exponential moving average, one is the moving average. It does look like perhaps we might come lower here and fill out this week. We do see that happen quite often. This was bought up quite aggressively and quite quickly, but perhaps the selling isn't over yet. So what were some of the warning signs that we were going to get a drop here? Well, if we look at the RSI here, again this is on the 4-hour chart, we can see we had lower highs here. And if we do the corresponding points on the chart using the bodies of the candles, which is what the RSI goes on, we can see we had higher highs. So this was a triple bearish divergence. So I was expecting a pullback here. I wasn't expecting this big of a pullback, perhaps to this 50 moving average on the 4-hour and perhaps bouncing there. But we did get a massive sell here. And looking at some of the more on-chain analysis, we did notice that a lot of miners were selling large amounts of Bitcoin during this dump. So just looking again using the EMA ribbon here on the 4-hour chart, we can see that currently the body is above the bottom of the ribbon, so it is supporting us. But if we do break below this ribbon with a open and close of a candle, I think we are going to go lower. We can just see the volume here on the 4-hour chart, this massive volume in this massive drop here. We can see that it's just close to the volume during the Elon Musk pump when he declared that he bought Bitcoin. And just looking at the daily EMA ribbon now, we can see we got support on the top of this ribbon. And we can see during previous occasions this has supported us during the bull run. And it's been a long time since we were below this ribbon with a open and close candle back when we were at 10,000. So I would be looking for this ribbon to support us, but perhaps we could come down all the way to about 40,000 without breaking this ribbon. And just looking at the 1-hour RSI, it has come all the way down to a 20. And this is quite a good indication for bottoms when we do get to this white dotted line, perhaps dip a little bit below. It is something I look for when trading. But to indicate a bottom here, I do think we need to see some sort of bullish divergence. So at the moment we can see the bodies of the candles here are going up and the RSI is going up, so there's no divergence there. I would like to see the bodies of the candles come down lower while the RSI goes higher to indicate a bottom. And I would like to see that on some higher time frames as well, not just the hourly, because on the hourly it could just indicate a small bounce up, whereas on the 4-hour it could be a bigger correction back to the upside. And just a good example of that, we can see here on the RSI we are going up with the bottoms here, and on the price action we were going down with the bodies of the candles, and this indicated the bottom here where we turned around and started going back up again. So I would be looking for something like that to indicate the bottom. Over to the CME charts, and I did find this interesting trend line here going back from the start of the year. And we can see it connects the bottoms here, acted as resistance here, and has been acting as support here. and then we had this big dump and it hit it pretty much exactly at 48.5, acted as support. So we'll be watching this trend line closely here to see if it continues to act as support, or if we do break it, perhaps we will have a bigger drop down. So just into some more long-term analysis here. This is just the 2017 bull run. As you can see, we had these pullbacks, around 30 to 40% pullbacks. We did have several of them. And we did also pull back to the 21-week exponential moving average several times on the bull run, bouncing and continuing upwards. I would like to also point out how similar this action here from the beginning of 2017, where we ran up, had a 35% pullback, ran up to a higher high, and then had another quick pullback. And we did have this candle here with a massive wick. And at the moment, this does look quite similar to the current trend, but we'll go into that in more details. And again, this is the 2017 bull run here. Well, starting from 2016 going into 2017, just to show that we pulled back to that 21-week exponential moving average. And also on the RSI, we pulled back to this 53 line coinciding with these pullbacks, and we bounced several times during the bull run. And I just want to apply this to the current bull market. Before we do that, I just want to quickly show this volume profile here, the VPVR indicator, and it just shows the amount of volume traded at certain price levels. We can see here the biggest spike from this peak was at the 48,060 level. We can see we dropped a pretty similar level to that. We did drop all the way to 46.5 on the Coinbase chart, but we can see this acted as support. I think if we do break this level, then we will be coming down to these levels lower down at 40,000, and there is a big area of support here, and this goes all the way down to around 34,000, 33, 34,000. And also this green line here is the 21-week exponential moving average that we were talking about earlier, and we can see how it acted as support at the start of this bull run. And currently this level is at 31,500. We just had a new tick on it at the start of this week, and I have this dotted trend line just to show an indication of how this might move in the coming weeks. And I do think that we are going to have a pullback at some time to this line. It also corresponds with this volume profile here as an area of support, and just drawing the fib retracement from the previous 30% drop here to the peak, and the golden pocket is around the 39,000 level. So this might take several weeks. Perhaps we will come to this golden pocket and meet this line, or perhaps we might wick down and touch this 21-week exponential moving average while holding the body in this golden pocket area. And this would also be the top level here, which was resistance here on this run up, which could turn back into support when coming down to it. So just again, this is the 2017 bull run, and I have that 55 line, 53 line marked off on the RSI where we bounce from, and also the 21-week exponential moving average that we bounce off also, as shown previously. And I just wanted to show you here, this was around the end of 2016, start of 2017, and this is on the weekly chart. We did have this run up here and had a correction, a 35% correction, ran up higher, and then we did have the correction again not long after. And also there's that candle with the long wick, which is similar to the wick we currently had. And just noticing here on the weekly, this is a bearish divergence here. We have lower lows on the weekly RSI and higher highs on the price action between the bodies of the candles, and this indicated the drop that was to come. And again, we had a similar thing here where we had lower highs on the weekly RSI and higher highs on the price action, and it indicated the drop here further down again. Also, I'd like to point out that the stochastic RSI came up to this yellow line and came back down, and that happened twice after these divergences. So I just want to compare that to the current price action. So looking at the current price action now, what can we see? We can see that the weekly RSI has lower highs and the price action currently has higher highs. So there is a divergence happening here for this to be completely confirmed, we'd want to see it go below the 48.6 level, below the body of this candle. And perhaps this will lead to this second 30% pullback. And also the RSI will come down to this 53 level, just like in the previous bull market. Now we did have this yellow line for the stochastic RSI where it topped out on the previous times after the divergence. We're not quite there yet, but this doesn't have to repeat. It does look like it wants to turn around at the moment, but this may take several weeks to play out as this 21-week exponential moving average becomes higher. If we were to overlap that bearish divergence that we showed from the 2017 bull run over onto the current bull run, we can see quite a similar price action here. This isn't lined up perfectly, but we can see we had this run up, we had 30% pullback, and we've gone higher. And then it shows this quite dramatic dip here, and this is the wick that we've just had. So perhaps this might take a bit longer to play out, this dip, and then we will carry on higher. But it's just interesting to note the similarities between the two. And something else I found interesting, this is actually the 3-week chart, and this is the entire Bitcoin price all the way back from 2010. I've just got the RSI drawn here, and I've put this yellow line across here indicating the tops that we hit several times during the history of Bitcoin. And we can see if we line these up with the price action, it actually coincided with the top of a bull run. So we can see the first top here in 2011, and then the second top, this was a bit of a different cycle where we had a 60% dip and then carried on higher in the same year. But both times it did come pretty much exactly to this yellow line and topped out there. And the third time here in the 2017 bull run, it also coincides with the top of that bull run. And currently we are quite high. We are sitting at a 91 reading, and this yellow line is at a 96 reading. So perhaps we might top out here. Perhaps we'll do a similar thing to the 2013 bull run where we had quite a big correction. I believe it was 60% correction, and then we went for one more run higher, also topping out here at this yellow line. So just something to watch here. Perhaps we'll start coming down before touching the yellow line and then going up, finishing the bull run. But if we look currently, this isn't showing the dip yet because this is the Brave New Coin Liquid Index for Bitcoin, which shows it's a combination of all the exchanges together, and it doesn't get updated till the next day, so it's not showing today's current price action. But we can see the next tick on here isn't till the 8th of March. It'll be interesting to see how this current drop affected this RSI here, if we've leveled out, if we've started going down, and also how the price action will be by the 8th of March. So just something to watch as to know if maybe we've topped out and we're due for a bigger correction. Now I want to talk about how to know when this bull run is over. And we're going to be looking at the Pi Cycle indicator here. And this indicator basically works on this green line and this orange line. Now the green line is the 111-day moving average, which is basically each point is the average price over the past 111 days. And the yellow line is the 350-day moving average multiplied by 2. So that's obviously the average price over the last 350 days times by 2. And basically when this orange line crosses above the green line, this indicates the top of the bull run, and it really is as simple as that. You've probably heard other YouTubers talk about it, and I think it's relevant to also share this information for those that haven't seen it. So you can see here, this is the 2016-2017 bull run. We can see these lines were getting closer together the higher we went. We did have a few pullbacks here. The line got quite close here together, and we had that pullback and it expanded out again. And then if we just zoom in, we can see that we got closer and closer here, and this purple line is exactly where they crossed. And if you zoom in, you can see that this is pretty much exactly the top of the bull run. It was one day before we peaked out, but it's pretty much exactly at the top. So let's look at some previous bull markets and let's see how close we were on these ones. So going to the first bull market here where these lines became relevant, and we can see here on the 2013 bull run, see these lines getting closer together, and it indicated the top at this area, and we'll just zoom in on that. And we can see that they crossed on this candle here. It wasn't the exact top, but it was only 4 days away from the actual peak. So again, very close to the peak and a very good indication of when to sell. So this is the peak that we just looked at here. This was at the start of 2013. Ignore this here, this 2011, it's not right. And we can see we had a double peak in 2013 in the same year. And we can see we had this run up here. These lines got closer together and it indicated the top right here. So we'll just zoom into that one also. We can see it indicated the top just slightly after the peak was in, but again, it's only 4 days from the actual peak. So within a plus or minus 4-day range so far for these predicting the bull market tops. So this is the one that we just talked about at the end of 2013. And again, we had another bull run in 2017. These lines got closer together and they crossed right here. And if we zoom into this one, we can see that they predicted the top right here, and it was actually only 1 day away from the peak. So all 3 times it's been within a 4-day period of the peak, and it's very accurate as an indicator so far. So this is the peak we just talked about, and now we're in the current bull run in 2020, 2021. Ignore this yellow line here. We can see these lines are getting closer together quite aggressively. And we'll just zoom into this area to get a closer look. And just zooming in, we can see how close these lines are. And again, it's not showing that pullback yet until tomorrow. But currently the lower line is at 28,840. The high line is at 31,460. So that's about a $600 price gap there. And we can see that these are getting closer and closer together, and it'll be interesting to see how this pullback that we just had affected these lines. But this is something definitely to keep an eye on as we get closer, as these get closer together, just to indicate where possibly that is the top of the bull run and it's time to sell the stack. And hopefully the accuracy is within that 4-day range again. And I think this is one of the best tools we can use to know when to exit the market. So I hope you enjoyed that video. I hope that information was useful, and I hope you're successful in your trades. Hope you didn't get wrecked in this drop we just had. Use low leverage in this volatile market that we're in. Happy trading. I'm Bitcoin Mamo. See you next time. Bye.